The Wall Street nosedived as President Donald Trump's sweeping tariffs sent shockwaves through global markets. The Dow Jones plunged over 1,500 points and the NASDAQ tumbled more than 5.5%, and the S&P slipped by 500 into correction territory. Fears of a trade war and recession mounted as investors reacted to the sudden policy shift. Here's a detailed report on what happened to the markets. Take a look.
Wall Street was in a free fall on Wednesday as US President Donald Trump imposed sweeping tariffs on major trading partners. The Dow Jones Industrial Average nosedived 1,550 points, while S&P 500 slumped 4.4%, officially entering correction territory. The NASDAQ shed nearly 1,000 points, marking a 5.5 intraday decline. Top tech and banking stocks took a massive hit. Apple tumbled 7.5%, Amazon slid 7%, and Tesla dropped by 5%. Meanwhile, major banks like JP Morgan and Citigroup fell between 5.3% and 8% as fears of an economic slowdown loomed. The financial bloodbath wiped out nearly $2 trillion in market capitalization within minutes of market opening. The Volatility Index, or VIX, spiked 24%, signaling rising investor panic. Analysts warn that new trade barriers could cost the average American household $3,000 per year. The shockwaves extended far beyond Wall Street. Japan's Nikkei plunged 2.8%, Hong Kong's Hang Seng fell over 1.5%, and Europe's DAX and CAC 40 posted steep declines. Amid the turmoil, the US dollar weakened sharply while bond yields fell, signaling growth fears of an economic downturn. With markets rattled and uncertainty looming, all eyes are now on Washington, D.C. Will the White House adjust its business strategy, or is it just the beginning of a deeper market rout?
Financial markets around the world reeled following President Donald Trump's latest and most severe set of tariffs, and the US stock market took the worst of it. The S&P 500 fell 4.8% on Thursday, more than other stock markets. The Dow Jones Industrial Average dropped by 1,600 points, and the NASDAQ Composite sank 6%. Little was spared as fear flared globally about the potentially toxic mix of weakening economic growth and higher inflation that tariffs can create. Everything from crude oil to big tech stocks to the value of the US dollar against other currencies fell. Even gold pulled lower. Mercedes-Benz is reportedly considering withdrawing its entry-level luxury models such as the GLA SUV from the US market due to the 25% auto tariffs. The tariffs set to take effect this week could render lower-end models commercially unviable, with analysts estimating potential losses of up to 3.4 billion euros for both Mercedes and Porsche. In response, the German automakers may shift their focus to more profitable top-end vehicles in the US market, following a broader trend seen among luxury brands like Aston Martin and Ferrari. However, Mercedes has not made a final decision yet. India faces an estimated $31 billion economic hit from the 25% reciprocal tariffs imposed by US President Donald Trump, potentially slashing 0.72% of its GDP. The tariffs, which impact key exports like electronics and trade ties, exclude vital sectors such as pharmaceuticals, steel and energy. The US has been a significant market for Indian exports, though its share has fluctuated over the years. Vice President J.D. Vance defended former President Donald Trump's controversial tariffs, calling them a necessary shift in U.S. economic policy despite concerns over rising consumer costs. Vance acknowledged that while the tariffs could drive up prices, especially for low-income households, the administration's tax cut and deregulation efforts are designed to offset those impacts. However, experts warn that tariffs could exacerbate inflation and strain consumer confidence in the coming months. US Vice President J.D. Vance has dismissed reports of claiming that Elon Musk will be leaving the Trump administration's Department of Government Efficiency as fake news. Vance confirmed that Musk's tenure as a special government employee is set to end between late May and early June, but he will continue to serve as an informal advisor to the administration. Muthoot Mini Financiers Limited, one of India's leading NBFCs, popularly known as Muthoot Yellow, announced that ICRA Ratings has assigned a credit rating, a stable, for its long-term borrowings. The company's long-term facilities were earlier rated as CARE A Stable and Indy A Stable, respectively, by CARE Ratings Limited and India Ratings and Research Private Limited.